J.P. Morgan Chase actively engaged in the silver market by pushing the price of silver down. The way they do this is they sell short silver futures contracts at the COMEX or NYMEX, where futures contracts are traded. Are you aware of the futures market, how it works? What they do is they sell contracts to deliver 5,000 ounces of silver. Each contract is for 5,000 ounces of silver. And by selling enormous amounts of these contracts to deliver silver in the future, it becomes price suppressive. Speculators go in and they buy silver on leverage in these paper contracts, and they buy it, say, and they put 10% of the price of silver down to be able to control more silver. If you control more silver for the amount of money, theoretically, when silver goes up, you earn a lot more money. So they make paper silver become more attractive for investors to keep investors away from buying the real deal. And as long as they prevent people from buying the real deal, the price of the real deal doesn't go up. So they're diverting demand away. And what they're doing, they're selling endless amounts of these contracts without having the silver to back them. The way I can prove that they are selling unbacked silver futures contracts is quite simple. The world produces all sorts of financial statements. Over 10 years, I've discovered where to look. I have an email list of 80,000 readers, and my readers have been very helpful to me. And one of the things you can go to is you can discover the amount of open interest, or how many contracts are sold in COMEX. That's a very transparent and open market. And they have sold up to 800 million ounces of silver in the paper form, all total. That's the open interest, not just J.P. Morgan, but like the whole market. However, the amount of silver that's in the warehouses for delivery is only about 50 million. So when 800 million is sold, or on paper to be delivered, but there's only 50 million in the warehouse, you can see that there's a bit of a problem. It's like fractional reserve lending, fractional reserve banking, but applied in silver.
How long can that go on?
It can go on as long as investors don't take delivery. But as long as investors want to buy it only on leverage, to get the leverage, and don't want to pay in full, they never intend to take delivery, and it can go on almost indefinitely. It can go on until somebody like the Hunt brothers decides to come into the market and tries to take delivery. That happened in 1980, and they broke the back of the Hunts by raising margin requirements, things like that. And the Hunts, they bought too much on leverage, so the Hunts broke themselves by being foolish about it. So that's one way they do it. Now, the COMEX is the open and transparent market. The other market is the over-the-counter market. That's non-transparent. And that is, let's say, if a miner or a refiner has silver on account with one of the large banks in a bullion account. Well, all those bullion accounts I've discerned have 0 bullion in them, because there's another financial statement that basically tells you that. The BIS, the Bank of International Settlement, produces a report that basically showed that the grand total amount of notional value of derivatives was 100 billion, and it moved up to 200 billion in a matter of just 6 months. Now, you're not going to increase it by 100 billion to $200 billion of deliverable silver that's owed to market participants, when the entire world's mine supply of silver is only a mere $10 billion. So the amount of silver that they owe is roughly the equivalent of 20 years worth of total silver production of all mines in the entire world.
And how long do you think this process has been going on? What's the history?
Well, what I'm describing to you is 2 forms of paper silver that's unbacked by real silver. Now, we've already experienced paper silver unbacked by real silver in the United States. It's called paper money, dollar. Because we're all familiar with them. They used to be silver certificates, and now they're worth... They broke. You can't get silver from your paper anymore, so the value's significantly diverged. If you go back in history, you could have said, well, gee, as soon as paper money became totally untrustworthy, paper should have gone to 0 value. And that's happened numerous times. It's sort of a rare fluke in history that our paper money has actually survived that break from real money, the underlying silver.
And do you think the banking system has helped to keep that paper money afloat?
Well, this is why they're creating these paper contracts, in order to keep paper money afloat. Because as long as people don't demand the silver and the gold, the system survives. But more and more investors these days are beginning to wake up, and they're demanding the real silver. And so it's beginning to break the back of that market. We've had hints of delivery failures, especially out of Canada. Canadian banks issue silver certificates. Investors have had extreme difficulty getting these silver out, because the Canadian banks just say, well, we don't have enough people who are even buying 100-ounce bars or 1-ounce rounds, so we don't even have any at all. Well, you have a certificate that says redeemable in silver. Well, we don't have any. Well, so the only way to do it is to get the silver equivalent of your paper money back. which is not what people want. People are wanting to take delivery more and more, and they're discovering these banks have nothing. Very large investors have been shown empty vaults where you have to go to the downtown branch of HSBC in order to get that. And they go to the downtown branch of HSBC or one of the other ones. What's the other one? Scotia Mocatta. There's like nothing. Or all they have is maybe 50,000-ounce bars. But who wants a 1,000-ounce bar? So it's the equivalent of almost nothing.
So what is your understanding of how long have they been that the banks have not carried?
Depends on, you're asking me how long has the monetary fraud continued. I'll reinterpret the question that way. And it depends on how you look at it, because banks as far back as, say, the late 1800s have eliminated silver from their coinage standards. I think Germany was one of the first. They were one of the first to go to gold-only standards. If people say, oh, those precious metal bugs, they want to go back to a gold standard. No. The gold standard was the initial way that they left silver, because banks didn't want to have to redeem silver. Silver being extra bulky, they wanted to get rid of it and not have to deal with the two metals at the same time. So to go back that far, we're talking almost 130 years of paper money shenanigans going on in the Western world. If you go back to 1913, that's when the Federal Reserve was founded, when they began getting the monopoly to issue paper money to the United States. That's another huge, big scam and fraud. If you go back to, say, 1930, go forward to 1933, that was when gold was outlawed within the United States, and it was at $20 an ounce for over 100 years, and then as soon as gold was, say, recalled, gold was revalued upwards to $35 an ounce, and it stayed at $35 an ounce all the way to 1971, when that peg could no longer be maintained, and the default went now to the foreigners. So foreigners could no longer exchange dollars for gold at the standard rate of 35, and that's what broke that and exposed that fraud. Was France had a lot of dollars and they wanted to get their gold. Charles de Gaulle broke the back of that. And that was in 1971 when Nixon, closed the gold window there. And there was another earlier default in 1964 when Kennedy was assassinated. They issued the 50-cent piece, Kennedy, $half in record numbers, but that was the last year that you could convert your paper dollars into silver. Well, some people will argue and say, well, they kept the silver window open until, say, 1968. People were redeeming and buying silver certificates across the country and taking suitcases full of them back to the U.S. Mint and getting these weird bars that they were producing. The next major event, of course, was 1980, because gold went from $35 an ounce all the way to $850. In between that, though, in 1975, futures contracts began because they wanted to be able to, try to maintain control over the gold market. So futures contracts were a big form of paper gold that started. So the futures contract market, I was explaining to you, that started in earnest in 1975. And the latest thing, I guess, was just a few years ago that the silver ETF was formed. Now, this brings us back to J.P. Morgan Chase. The silver ETF is now, probably about 200 million ounces of silver, theoretically. The only people who can redeem the silver from the silver ETF are authorized participants, and you have to do a minimum loss of 500,000 ounces of silver at a time. And only the large big banks in the club can redeem those things. No person who buys a share can ever get silver out of the silver ETF. In that sense, it's obviously a scam. But in the other sense is that J.P. Morgan Chase is now, over the last 2 or 3 years, known to be the big silver short on the COMEX. They also hold the largest derivatives in the world, and of about, say, 70 trillion notional value, as shown in their OCC Office of Comptroller report. So obviously they're the big ones doing
what about the
problems.
Big
But here's the thing, that J.P. Morgan Chase is the custodian of the silver SLV. So they are theoretically the ones doing the vaulting of the silver for the silver ETF that only authorized participants can actually get the silver out of. The only other authorized participants are LBMA, or London Bullion Markets Association members, and they're all in the club to try to maintain and manipulate silver and gold prices. So, in a sense, to summarize, J.P. Morgan Chase is like putting the rat in charge of the cheese in the silver market. There's total conflict of interest in allowing them to be the custodian of the SLV. There's no way they should be allowed to be the custodian. but they're so big. They're the biggest banks in the United States. They're too big to fail, but perhaps we should call them too big to bail, because there's no way we could bail them out of all their obligations. The United States economy is not large enough. The United States economy is only, say, 13 trillion range, and the notional value derivatives that they have on their books is in the 70 to 80 trillion range. Nevertheless, I've chosen to bank at J.P. Morgan Chase because they have the best services for our business, and they are very professional. Thank you for coming by. I'm glad I could educate you about your bank today.